And joining me for a closer look at those market moves is Faheema Adia from Momentum Securities. Thank you so much for your time, Faheema. Let's actually start off with the pressure that we're seeing in the U.S. markets. Quite a lot that is happening there, but I want to start off with the kind of alarm bells that we have ringing on a U.S. recession. I think once a year we get these alarm bells ringing and it never actually materializes. So talk to me about the sudden panic that we're having here.
Good evening, Sinati. Thanks for having me. Yeah, so I think what's really driving the alarm bells this time is the tariffs. Donald Trump has been rolling them out hard and fast. We've seen them come through on a couple of countries now, Mexico, Canada, China, and there's threats of even more to come. And that, of course, will have a drastic impact on the U.S. economy and also on the global economy. So investors and consumers are, of course, just concerned that all of this will result in increased inflation. It will just put U.S. growth under pressure. And we've already seen GDP numbers in the U.S. come a little bit weaker than expected in the last reading. So there is concerns now that, this will impact growth in the year ahead if he is, keen to keep up with all of these tariffs. And there's concerns there could even potentially be a recession. So a lot of geopolitical uncertainty and concerns at the moment is what's driving that weakness.
A lot of uncertainty indeed. And then on the tariff front, surprisingly to me, we had pressure on the Stellantis stock price today, which is quite interesting because I thought that the automakers had actually gotten a reprieve on the tariff, maybe even temporarily. I'm just wondering at this point, is it time to panic?
It's a difficult one to say. The markets have just been so volatile, and I think for now it seems like the only safe place has really been gold.
Yeah.
But yes, I think it just depends. For now we can't really say with certainty what exactly is going to come here. He does seem to want to keep to uphold these tariffs that he's implemented, and if that is the case, it will have some very negative impacts on the U.S. economy and on Europe, China, all the other big economies in the world. So I think investors definitely do have a reason to be scared and cautious at this point.
All right. Well, let's go into ABSA, and they released their results today. A double-digit increase in headline earnings, lower debt impairments. Things look good. The share price, though, didn't move much the last time I checked, but I'm thinking maybe they just may have been a lot of buying prior to the results being released. What did you make of those numbers?
Yes, so it was a decent update considering that it's been a very tough environment. We've seen the consumer under a lot of pressure, businesses too. And it was good to see that the results actually beat consensus expectations for both headline earnings and the total income. If we look at the credit loss ratio, that's also showing improvements. It came in at about 103 basis points. The main issue, of course, with ABSA has been the constant change in leadership and in their CEO. So that has been a bit of a headwind for that bank in particular. But I think in general, we're seeing muted performance come through from the banks in terms of the share price performance since the beginning of the year. And that's just due to, I think, other factors such as the geopolitical risks that we've just discussed related to things like tariffs, the impact that could have on South Africa. And then, of course, we also have our own local unique challenges, such as very muted growth expectations. It's now expected to fall below that 2% that was initially anticipated. So a combination of those things are what I would say is really impacting the banking stocks.
Also, just as you're talking about growth, it was quite interesting to see ABSA in its two of its scenarios forecasting growth of more than 2%. But of course, we will get, I guess, more insight on that when the budget comes out tomorrow. Let's get to your stock pick for today. What are you choosing?
So my stock pick for today is Sun International. So Sun International recently released quite a strong trading update, expecting headline earnings per share to increase between 14 to 20%. We're seeing pretty strong growth come through from Sunbets, that's the online gambling segment. The urban casinos have been doing quite well, and also resorts and hospitality is showing pretty strong growth. They are trying to turn around Sun Slots, which has been a bit of an underperformer, but there is a plan in place there to turn it around. So I am expecting to see some further improvements in the company and in the stock price in the months to come, once we hopefully see some better economic performance come through and a consumer that is under less pressure. It's currently trading at quite an attractive valuation at the moment on a forward PE of 7 times.
All right. Well, thank you so much for your time and giving us your analysis on what has moved the markets today, Faheema. That was Faheema Adia from Momentum Securities.